What does the new round of stimulus measures proposed by Biden mean for the economy, stocks, and gold? Well, here to discuss that with us is Peter Hugg, Global Trading Director of Kitco Metals. Peter, welcome back.
It's good to be here, David.
As luck would have it, I was telling you offline, as luck would have it, right after we spoke last week, gold tanked, and it's falling again today. We're going to be talking about gold. But first, let's recap the big news item of today and yesterday. Biden just passed the $1.9 trillion stimulus plan that was much anticipated. Your initial reactions to this amount and how it's going to be spent?
Well, first of all, he's proposed it. He hasn't passed it yet. I think he's going to get, even though he does have the majority with Kamala Harris in the Senate, I think he's going to get significant pushback from the Senate on the 1.9 trillion proposal because a good chunk of it, or at least a good percentage of it, is going to the states, and the Republicans have had an issue in bailing out the states. So we'll see how that plays out. As I've been saying, David, for a number of weeks now, even prior to the election, that it is absolutely critical that we get significant stimulus added to the economy, as a bridge until, this vaccine can be widely distributed and, we develop something that gives, individuals confidence to go back to work, and we can open up the economy. And, that issue is still right in front of us. We're, in the middle of the worst wave of the pandemic that we've ever seen, and I still think it's a matter of time. It's a when, not an if, that the economy will restart. But I still think we've got a few months ahead of us before we're actually in that mode. So this 1.9 trillion, if it gets approved, is absolutely crucial. Sort of to keep people, in essence, alive, and until we get to that point.
So here's my question, Peter. December data was pretty bad across the board. Retail sales were down almost 1%. We lost 140,000 jobs in December alone, when the projected payroll figures were actually supposed to be positive, but they were negative. And so do you think the stimulus measure is enough to revert course?
I think it'll help. Certainly the evictions will stop. There's been a moratorium on those. The unemployment payments will continue, from what I understand, until September. Small businesses will get another jolt to keep them at least alive. So we have something to reopen. We have help for the states. I think that's critical. I still think there's going to be some social turmoil past the election with the Democrats taking control. And, I think it's crucial for the states to be able to maintain their essential services, whether it's police, fire, or paramedics. So, in that context, I believe that this is a necessary step. And I think, again, it's a matter of when, not if. But right now, I think the economy is in trouble, as we saw this morning with the retail sales. Both November was revised down, and December came in under estimates. So the economy is struggling. There are parts of the U.S. economy that are what you would classify as semi-open, but the big cities, New York, L.A., they're in serious trouble, and they're in basically lockdown mode. So there are a lot of people out there struggling, and we're not out of the woods yet. And this is going to go a long way to keeping the hope and the economy alive until this vaccine can do its work.
Gold is down about $17 as we speak right now. In the morning of Friday. And so I wonder why gold is reacting negatively to, first of all, stimulus news, and second of all, bad economic data. I would expect it to do the opposite.
I think it will do the opposite. It's a matter of timing. If we look at, the March time frame when, the pandemic first came out, and, we had closures and the economy was starting to backtrack. And I think we're in a similar mode right now. that you had a situation where people got scared and they remain scared. And until there is some clarity here, moving assets, whether it's out of equities, I think the Dow's down some 250 today.
Yeah.
Until there's some clarity here, I think the natural reaction, and again, it sounds like an old record, is that there is this instinctual sort of urge to move into liquidity, and liquidity continues to be identified as cash.
Is that why the bond yields have moved up as well?
The bond yields are surprising. I mean, we had the 10-year almost trade at 118 early this week. It's back down to around the 110 level. But I do think it's a move to safety. I think some investors are concerned about the lofty levels of the equity market, and they've diversified some of their equity positions, moved them into cash, and put them into the 10-year. So again, it's more a fear trade and a move to safety that is creating this. Once the economy regears, this pent-up demand and this cash that is now sitting on the sidelines is going to make for an extremely vibrant recovery. Hopefully sooner rather than later. I'm still thinking sometime early summer that this will start. But it's, again, I think it's a when, not an if, that this will happen.
So from now to early summer, is this fear going to last? Should we stay short?
Again, right now the government just is a mess. I think Biden needs to get in there and at least show that the government is, again, functional. I mean, I'm not trying to be negative on President Trump, but he's basically fired everybody. There's really nobody running the government right now. I think people are at least looking, whether they agree with it should be a Democrat or a Republican, looking for some kind of leadership out of Washington and something getting done and getting this vaccine distributed. I mean, the 20 million doses that came out in December were supposed to have been in people's arms by the end of December. I think we're not even 50% there yet. So there needs to be some leadership here by the government. And I guess my caveat there would be this impeachment trial, which I don't agree with. I'm not suggesting that what Trump did was right. I totally disagree with what Trump did, and he should be held accountable. However, having an impeachment trial in the first week of Biden's presidency while he's trying to get a handle on coronavirus and trying to get a handle on the economic recovery, in my opinion, is a fool's game. So that could be an issue to get things done quickly. And if it does delay action by the government, this trial, I think the fear will increase, and I think that will manifest itself in lower equity prices and possibly lower commodity prices as people continue to move to cash.
So if you could sum up in one sentence or two, what exactly investors are fearful of right now? Because prior to Christmas, I remember there was a lot of uncertainty as to whether or not stimulus would be proposed, at least. Now it has. Before then, vaccine, we weren't sure if we were going to get a vaccine. We had that ever since November. What's the fear now? I don't think there's any new information from the corona side that is driving fear, unless I'm mistaken.
Well, there I disagree. I mean, I think people were given hope back in November that when Pfizer came out and then Moderna came out and then Johnson & Johnson said they were coming, and I heard today that their vaccine is a one dose shot, that in 2021, and again, people get exuberant and they bring timelines in quickly because they assume it's tomorrow when the government speaks, and it's never tomorrow. But the hope was that everything would be back to normal after New Year's. If you look at the New Year's celebrations, I mean, 2020 is dead. 2021 is going to be great. It will be, but it won't be immediate. And if you look at an economy in the U.S., globally, these economies are going at maybe 60%. And you've got equity markets that are reflecting full-blown healthy economies. I mean, there's a disconnect there. And you would expect that people, when they get nervous, and they are still nervous about this vaccine and the timing of when the economy is going to revamp, that nervousness continues, and you can't blame them. I mean, it just looks like the information coming out of Washington is just so disjointed, and people just don't have a comfort level that somebody's steering this ship. And I'm hoping that when the Biden administration takes office, that they'll be able to effectively and quickly mobilize and show the American people that there's a plan, and the plan makes sense, and it's going to work. Once that happens, the markets are forward-looking, and they'll start to invest in anticipation of this happening. But right now, it's still a question mark.
Inflation also rose lower than expected in December, with the PPI, the Producer Price Index, up 0.3%. The consensus forecast was 0.4%, so slightly higher than consensus forecast. Lower rather. And I wonder if that is also weighing down on gold prices today.
Again, our inflation model indicates that. Again, it's subject to the economy restarting and being somewhat normalized, but our inflation model indicates that inflation has the potential to become a risk, but not until probably third quarter this year. I mean, we've been saying that for a few months now. It's not an immediate issue. There are still inventories sitting on the market, and the offtake from the consumer is still not at full gear. And when it does again become a more pronounced demand equation, I think then you're going to see pressure and you'll see inflation rising. But again, it's an event that's probably just sort of June to third quarter of this year, where I think there could be an issue with inflation getting out of hand.
So after Friday's sharp drop, after today's losses, how are you positioned for gold for the coming weeks?
Again, it depends on on how you're asking me the question. If you're asking me the question as a trader, I'm in and out of this market on a daily basis. We got into the market when it broke through 1850 at the beginning of the week. Then it broke down through 1850. We got back out. I'm looking for 1825 to hold. If we lose 1825, I mean, at these levels right now, I'd be long. At the 1825-ish level, it's about 1827 as we speak. I'd be long the trade with a tight stop. If we lose 1825, we might see 1800. Mm-hmm.
As a trader, how do you usually?
That's my comment as a trader.
Right.
As an investor, I mean, these levels here, in my opinion, are levels to add to your position if you don't have your allocation at a level that you are looking at. So at 1825 gold, I think as an investor, I don't think you'll go wrong if you add to your gold position at these levels.
Peter, as a trader of this market, when you're in and out every day, are you usually following momentum? Are you selling into strength, or are you doing the reverse when things fall? What do? Do you sell, or do you just wait? Do you buy some more into the weakness? How do you approach this market right now?
Well, again, as a trader, this is a little different trading for Kitco, which is the largest or one of the three largest retail dealers in the market. As opposed to trading for a wholesale bank where you're trading size, usually trading 5,000 gold, you're trading a couple of 100,000 silver at a clip, and you're making markets to other banks or other major dealers. So from a retail perspective, a lot of the sort of movement in the market is dictated by what our clients are doing. If they're net buyers or net sellers, then you can position yourself based on the volume that's coming in on either on your bid or your ask. But we tend to be fairly conservative in our position taking, and we use both fundamental and technical analysis to determine whether we should be leaning more to the long side or leaning more to the short side on a day-to-day basis. So our book has to be traded minute by minute. We're open 24/7. So it's a situation that's very fluid. And, we make adjustments depending on what's happening in the market, whether it's a technical break or whether it's fundamental news that creates the move. We then have to make a decision as to how we want to be positioned, as things develop in the market.
Okay. Very good, Peter. Thank you very much for your update this week, and I look forward to speaking with you next week.
Okay, David. Thank you.
And thank you for watching Kitco News. I'm David Lynn.